All right, let's talk about it. There's a massive new tax law on the books, the One Big Beautiful Bill Act, and it's completely changing the game for entrepreneurs. So if you're running a small business, you've got to know what's near. We're going to break down exactly what this law means for you, for your deductions, and yeah, for your bottom line.
Okay, so here's our game plan. First, we'll get the lay of the land, what this new tax landscape even looks like. Then we'll get right into the nitty-gritty, the stuff that really impacts your business, like that huge 20% deduction and some new incentives for growth. After that, we'll tackle the not-so-fun but super important part, reporting changes. And finally, we'll zoom out and look at the bigger picture.
So, let's start at square one. What in the world is the One Big Beautiful Bill Act, or, OBBBA for short? To really get it, we've got to look at where it came from.
You see, the OBBA didn't just appear out of thin air. It's actually built right on top of the 2017 Tax Cuts and Jobs Act. Remember that one? It brought in a ton of temporary tax rules that, honestly, a lot of us got pretty used to. Well, now OBBA has been signed into law, and most of the big changes for small businesses are set to kick in for the 2026 tax year.
And that's really the key thing to grasp here. The OBBA is kind of a hybrid. It's taking some popular rules from that 2017 law, the ones we thought were temporary, and making them permanent. But, and this is a big but, it's also layering on a bunch of new regulations that, yep, as a business owner, you're going to have to figure out. All right, let's dive into the first really big one that's going to hit your bottom line. We're talking about a super important deduction, and it's specifically for what are called pass-through businesses. Think sole proprietors, partnerships, S-corps. That's a lot of you. Okay, so before we get into what's new, let's do a quick refresher. What is this qualified business income, or QBI, deduction anyway? Well, think of it as this really powerful tool for pass-through businesses. You know, the kind of business where the profits pass right through to your personal tax return. It lets you slice off a pretty big chunk, up to 20% of your income right off the top. It's a big deal.
And this right here, this is the headline. This is the big news about the QBI deduction. For years, it was this great benefit that was living on borrowed time, set to expire. But now, thanks to OBBBA, it is a permanent part of the tax code. That gives you a whole new level of certainty you just didn't have before.
So what does permanent actually mean for you in the real world? Well, for one, it means you can actually make long-term plans. You can map out buying that new piece of equipment over the next 5 years and know this deduction is going to be there to help. The law also makes a few other little tweaks. Now, the income limits to get the full deduction will go up with inflation, which is nice. And there's even a new minimum deduction of $400 for even the smallest businesses. Pretty useful stuff.
Okay, so beyond just deductions on your income, OBBA also has some really powerful new incentives to get you to invest in your own company's growth. Let's take a look at how it changes the game for when you spend money on things like equipment, technology, and other big-ticket items.
The first number you absolutely need to remember is $2.5 million. Why? Because that's the new, way bigger limit for something called Section 179 expensing. In plain English, this lets you deduct the entire purchase price of qualifying equipment in the same year you buy it. And that limit just got doubled. That gives you so much more firepower to invest and write it off immediately.
And the second number is just as awesome, 100%. The OBBBA is bringing back 100% bonus depreciation. This was a really popular rule that had been slowly fading away, and now it's back in full force. This is a massive, massive incentive for making those big capital investments.
So, what's the bottom line with all this? It's actually pretty simple. If you go out and buy a new machine for your shop, or you upgrade all your company's computers, you can now deduct the whole cost in that same year. You don't have to spread it out over time anymore. This is a huge, direct push to invest in your business's future, like right now.
All right, next up is reporting and compliance. And honestly, this is where the OBBBA is a bit of a mixed bag. On one hand, it's going to simplify some of your paperwork, which is great, but on the other hand, it's creating some brand new responsibilities for you as a business owner.
So first, let's talk about the good news on the paperwork front. You know those 1099s you have to send to contractors? The threshold for issuing those is jumping way up, from $600 to $2,000. And for those 1099Ks from places like PayPal or Stripe, the reporting threshold is going back to that old, much higher standard. For a lot of you, this is going to mean fewer forms to keep track of and file, a definite win. But here's the other shoe dropping. The bill also rolls out some brand new and frankly, very popular deductions for your employees, specifically for any tips and overtime pay they make.
Now, that's fantastic for them, no question, but it creates a whole new set of tasks that land right on your desk.
So what does this actually mean for you? Well, basically, this great new employee benefit becomes your new compliance headache. You're now on the hook for tracking and reporting these new deductible amounts. They're giving you a little bit of a break for 2025. You can use a reasonable estimate. But come 2026, your payroll system has to be set up to report these numbers separately on W-2s. Make no mistake, this is a pretty significant new administrative burden.
Okay, finally, let's pull back and look at the whole forest, not just the trees. To really get the full picture, we have to understand the broader context of this law. We're talking about its price tag and its overall complexity.
Yeah, a number that big is kind of hard to wrap your head around. According to the Committee for a Responsible Federal Budget, all these tax changes we've been talking about, plus the other parts of the bill, are projected to add about $4.1 trillion to the national debt over the next 10 years.
And this quote from Maya McGuinness, who heads up a major fiscal watchdog group, really sums up how a lot of budget-focused people are feeling. There's some real concern out there about whether these tax cuts are sustainable in the long run.
And you know, it's not just about the money. Policy experts are also flagging a big increase in complexity across the board. The Brookings Institution says that this pass-through deduction, even though it's permanent now, is going to create some serious tax enforcement challenges for the IRS. And like we just talked about, law firms are already highlighting the new administrative burdens on employers. So the consensus from the experts is pretty clear. You need to start planning for this stuff now.
And that really brings us to the big question that every small business owner is going to have to ask themselves. The One Big Beautiful Bill Act has created a new normal. On one hand, you've got these incredible permanent opportunities to save on your taxes, but on the other, the law is demanding a lot more from you when it comes to compliance. Figuring out how to navigate that trade-off, well, that's going to be the key challenge, and maybe the key opportunity for all of us in the years to come.